revenge invest, not revenge trade. And I'll explain that through a story of my own. When I was fresh out of university, I was big on trying to get rich and retire early. And I probably explained it in previous videos, but I grew up in this cult. So I know about things that the cult are going to do. And the cult was investing hundreds of millions of dollars into this small university. They had already built like this brand new soccer stadium for it. And they were basically trying to gentrify that whole neighborhood, starting with the university. So me thinking like an investor, I was like, oh, I'm going to buy like a small condo on the outskirts of that university in order to benefit from that gentrification, because I have essentially inside information about how this cult leader is going to pump hundreds of millions of dollars into this small sleepy town. What ends up happening is that this cult leader dies. He has like a heart attack or something. And then all of a sudden, all of his kids are like scrambling and fighting over his inheritance, and they're all suing each other. And so all of the investment into this small town completely freeze. And then the market just sort of crashes. So I lose like 50 grand or so. And at that time, that was a huge amount of money for me. You know, I had the temptation to revenge trade, because if I just say, oh, well, I'm an idiot and I just lost 50 grand, it's like really hard to stomach. Like, well, I made a decision and it just lost me this money, and that's the end of the story. Like, I get it. I get why people revenge trade. So I could have bought 2 more condos at the Lowe's right next to it and tripled down. I could have opened up a leveraged trading account and just started slinging and tried to have my P&L swing up 50 grand, because it's kind of like, oh, I'm already in the fast lane. And so why would I just step out of the fast lane after a loss? If it's going to swing, I might as well just hang out in that lane until it swings my way and then step out, right? I understand the mindset. I think about it, and instead I revenge invest. So what does that mean? Normally, the conventional wisdom is to put your money in something like the S&P 500 and then slowly roll into bonds or something more conservative as you age. But I just decided I chose to make a high risk trade or investment, and it went against me. So why would I stop making high risk investments now? I should keep making high risk investments. But as long as they're very strongly plus EV, that's the key difference between revenge investing and revenge trading. I basically said, well, I'm just going to stay in stocks my whole life. And instead of buying just the S&P, I'm going to buy about half NASDAQ, because NASDAQ shares a lot of the same company names as the S&P, like Apple, but it's a little more high beta. Meaning, for those of you who don't know, it tracks the S&P, but it goes up more when there's a bull market, and it goes down more when there's a bear market. But because the S&P or the stock market in general goes up on average, basically you're accepting higher risk, higher reward. But the longer you're in the game, the slope is steeper. So on average, you're going to make more money. Basically, I decided, all right, well, I'm just going to stay in higher risk, higher return investments for longer portions of my life to make up for this 50 grand loss that I took because I chose to make a high risk investment. And it worked out perfectly fine for me, but it just takes more patience, which a lot of people don't have. People lost 50 grand. They want to make it right back within that week or month. And for me, I had to wait about 10 years. So if you look up the NASDAQ versus the S&P 500 in the last 10 or 15 years or whatever it was, it outperformed the S&P by over 100%. So choosing to have half my money in a higher beta index, I made back more than the 50 grand I lost. I made maybe an extra $200,000 over having just left it in the S&P 500. So it worked out and some. Yeah. So that's the main takeaway to this story.